The silver squeeze has returned in a powerful way, although one could argue that it never truly disappeared. Instead of vanishing, it appears to have shifted direction and taken on a new form. To understand what is happening now, it is important to look at how the market has evolved and why recent developments suggest that silver demand is once again tightening supply. Many investors remember the original silver squeeze that gained widespread attention during 2021 and 2022. At that time, retail buyers focused heavily on acquiring physical silver, which led to shortages, higher premiums, and significant disruptions across bullion markets. While that movement eventually cooled, the underlying forces behind it did not vanish. What we are witnessing now is not simply a repeat of that event, but a continuation driven by different conditions and reinforced by renewed interest during recent price fluctuations. Silver prices recently surged to remarkable levels, briefly touching the low $80 range during overnight trading. Although prices have since pulled back, that temporary dip appears to have triggered another wave of buying rather than panic selling. This behavior is notable because it reflects a shift in investor psychology. Instead of stepping away when volatility increases, many participants are using pullbacks as opportunities to accumulate physical metal. Evidence of this renewed demand can be seen across the bullion market. Even before prices began retreating from their recent highs, signs of tightening supply were already visible. Several bullion dealers began reporting limited inventory, especially in popular product categories. During a recent Sunday night market review, it became clear that certain dealers were running low on various forms of precious metals, particularly silver bars. At the same time, some dealers are offering competitive pricing on specific products, such as kilo-size silver bars. This size has become increasingly popular with buyers who want to accumulate meaningful weight without committing to the much larger and less accessible 1,000-ounce bars. In many cases, kilo bars strike a balance between affordability, liquidity, and storage efficiency, making them attractive to both experienced stackers and newer participants. Despite these opportunities, it remains important for buyers to conduct their own research before making purchases. Market conditions are highly volatile and price movements have been unusually large. Recent trading sessions have seen swings of more than $10 within a single day across multiple markets. Such extreme fluctuations are rare and make short-term price prediction especially difficult. No one can say with certainty where prices will move next. Silver could fall further, stabilize, or recover quickly. Much of the uncertainty stems from the fact that markets are driven not only by data and algorithms, but by human behavior. Although automated trading systems play a role, final decisions still come down to people choosing whether to buy or sell, both in paper markets and in physical form. At the top end of the market, attention often focuses on billionaires and large institutional players acquiring massive contract-size bars. These purchases can involve 1,000-ounce bars bought in bulk, and they attract headlines due to their sheer scale. However, there is also growing activity among mid-level buyers, individuals and groups who may not command headlines but collectively exert significant influence on physical supply. These intermediate buyers are increasingly turning to kilo bars and 100-ounce bars. These formats allow for steady accumulation while remaining manageable in size. Although 1,000-ounce bars are still available through certain channels, they are far less common than during previous squeezes. In earlier years, some dealers openly carried these large bars and sold them to motivated buyers. Today, availability is much more limited. This renewed interest in physical silver is exciting because it removes metal from the open market. When buyers take delivery and hold their silver, it reduces circulating supply and increases pressure on available inventory. Many long-term stockers emphasize the importance of holding silver firmly regardless of short-term price movements. This philosophy centers on building and maintaining a core position rather than attempting to trade physical metal for quick profits. Silver has held monetary significance for thousands of years while also serving as a critical industrial material. Owning physical silver gives individuals direct control over a tangible asset that exists outside the traditional financial system. For many, this combination of historical monetary value and modern industrial demand is what makes silver uniquely compelling. True silver stacking is fundamentally different from speculation. Attempting to trade physical silver based on short-term price movements can lead to losses even during strong bull markets. Prices can rise sharply and then reverse without warning, as recent sessions have demonstrated. Short-term volatility reinforces the idea that silver ownership should be approached with a long-term mindset. As of this writing, silver prices have begun to recover somewhat after experiencing sharp declines earlier in the trading session. This back-and-forth movement highlights the unpredictability of the market. It also underscores why many experienced participants emphasize that silver's value extends beyond its quoted price. Holding silver can be seen as a statement against monetary systems dominated by large institutions. These include central banks, government authorities, and financial entities that influence currency supply and purchasing power. Modern fiat currencies, by design, lose value over time. Even in periods labeled as low inflation, central banks openly target ongoing inflation, which steadily erodes savings. Many silver holders reject this framework and choose instead to store value in physical assets. Over the long term, this approach has proven rewarding, particularly for those who have been stocking for several years. While recent price increases have benefited long-term holders, silver should not be viewed solely as an investment. It functions more effectively as a hedge, a store of value, and a form of financial insurance. This perspective is especially relevant for those currently buying physical silver. Understanding that silver ownership is a long-term commitment helps reduce emotional reactions to price swings. Dealers themselves often emphasize realism rather than hype, encouraging buyers to make informed decisions rather than chasing momentum. Silver's appeal does not require aggressive marketing. From a historical standpoint, the metal's role as money and its wide range of industrial uses speak for themselves. Silver is one of the most versatile metals on the planet, with thousands of applications across technology, energy, medicine, and manufacturing. At the same time, it retains its identity as sound money, something fiat currencies cannot claim indefinitely. Current price levels raise questions about valuation. Is silver properly valued at current prices when measured in dollars? Could it reach higher levels before the current bull phase ends? While such questions are natural, they miss a larger point. Fiat currencies throughout history have eventually failed or been replaced, while silver has endured across civilizations. For long-term holders, wealth is measured in ounces rather than fluctuating price tags. The true significance of price emerges only at two moments: when silver is acquired and when it is eventually sold. Everything in between, spot prices, futures prices, and market commentary, serves primarily as background information. That said, price signals still matter because they influence availability and behavior. As prices rise, bullion inventories tend to thin. Recently, shortages have extended beyond kilobars to include smaller denominations such as 5-ounce bars, 1-ounce rounds, and coins. Many dealers are reporting dwindling stock across a wide range of products. The reasons behind these shortages aren't always clear. Some speculate that dealers may be holding inventory in anticipation of higher prices. Others suggest that recent dips discouraged selling or disrupted restocking cycles. While motives are difficult to determine, the result is the same: less metal available to buyers. As more individuals buy and hold physical silver, their collective impact grows. Although retail holders represent only a portion of the overall silver market, their actions can still influence supply dynamics. Physical bullion ownership accounts for a relatively small share of total market capitalization, yet it plays an outsized role during periods of tight supply. What makes the current situation particularly interesting is that pressure appears to be building from multiple directions. In the past, silver was readily available through local coin shops, with many sellers bringing metal to market. That trend has shifted, and the balance now appears to favor buyers. Recent price declines, regardless of interpretation, have introduced a new dynamic. Instead of discouraging participation, they've encouraged accumulation. This surge in buying activity has created a momentum that extends beyond paper markets and into physical supply chains. Physical silver now sits at the center of a potential struggle between industrial demand and investment demand. Industries such as solar energy, electric vehicles, data centers, and artificial intelligence all rely heavily on silver. If investment demand continues to rise alongside industrial usage, competition for available metal could intensify significantly. Sustained demand over the coming weeks could push prices higher across both retail and futures markets. Fabricating new bars and delivering them to end buyers takes time, especially when supply chains are already strained. This lag can further amplify shortages and price pressures. Looking ahead, the market environment suggests that silver could experience heightened volatility and strong demand into the coming years. The recent dip and subsequent recovery may prove to be an early signal of a broader trend rather than a temporary anomaly. As expectations form around the future of silver, opinions will naturally differ. Some forecasts will be met with skepticism, while